Hello guys, welcome to another post-market analysis of Bank Nifty on October 25, 2023. So this is the price action for the Bank Nifty in a 5-minute time frame. But as usual, let's start with our daily chart. Okay, so market has ended today in a very bearish candle format. The previous day we were talking about the breakout of the support area, and from the last 1 week we were eagerly waiting for this breakout since this started to take a sideways action. Because of this, double top reversal pattern there. And previous day was before yesterday was holiday, so before the day before that was a red candle, and we were waiting to see the confirmation candle or a pullback towards the support area and see what the Bank Nifty is likely to do there. And today, as expected, Bank Nifty has performed very well. I mean, towards the downside. So, in the coming days, it may go further down to the levels like 41,500, 400 levels, because still there you don't see any proper support. But don't hurry up, don't take any trades, and or don't hold your positions. Always try to stay on a safer side, and don't trade a lot many trades until you become profitable in a 3-month time period. Trade only with one single lot. All right, so let's dissect today's price action and see how Bank Nifty has performed. All right, so Bank Nifty today has opened up at 43,350 level, and from there it has seen some bearishness, and to start with, it has created a gap up opening, but it couldn't sustain. It couldn't go reach to the upper side. Instead, it has seen some bearish candles in for the initial 15 minutes, and after that, it has taken. Wait a minute, yeah. So from there, it has taken a different path. So from here, it has gone in this direction. Okay. So let's assume that prices have come till here this far. Okay. Imagine you are in the live market. So you're seeing this is a proper reaction here. So we can mark that as our support area. Okay. That's fair enough. We have drawn the support area. And now from here, market has again, and from here, market has moved again towards the downside, and again from there it has started to go up. Okay, imagine you're here. Okay, imagine the market has formed candles only till there. Now you see a proper reaction there too, so you can mark that level as your resistance, and let's keep it in uh, the color which can be more be related towards the resistance. Okay, now, yeah, so now you have a support zone here and a resistance zone there. Let's see which one breaks first. All right, so after this point, market has formed a spinning top candles there, after which you can see that was a engulfing pattern there. You see these two candles here have formed an engulfing pattern there. Let me blow up a bit more so that you can see it very clearly. Yes, so this green candle, after that you're seeing this red candle completely engulfs this, and prior to that there is a very small moment, but you cannot take a trade based on that. So after which prices have again come down here. Okay, imagine now the market is at this point. Now your initial resistance line can now become a resistance area, because starting from there, you know, till that makes sense. Okay, so that can be your resistance area. Excuse me with the color. Let it be in green. So now market is here. After which, even here, if you see, even here, if you see, this was a kind of a good rejection from there. So what we'll do is we'll adjust our support area there. Okay, and then wait for the prices to come and see the price reaction here. Even though this is a kind of piercing pattern, it is not a solid confirmation for us to go there. And even here you have seen a green candle, but you can't take any trade for this much of, and there is no further confirmation. That's a very big risk versus reward ratio. Your loss would have been somewhere here. All right. So here market has this is the first candle. If this was hammer, then there would have been some chance here. Okay, if this candle was a hammer, then there would have been some chance here for the market, for the bank nifty to go towards the upper side. But this is not a proper hammer because you have a tall wick there. In order to understand what a hammer is, you can check in our candlestick patterns playlist. There we have given a thorough explanation on hammer and other a couple of candlesticks patterns there. Okay, so there was a breakout here. Okay, but like always, we do not enter into any trade based on a single candle breakout. We have to wait for the confirmation or the price retracement. So in this case, there was no confirmation candle. The next candle after the breakout candle was a bullish candle, and it has gone into the support area to close, and then it has retraced well almost towards the upper limit of your previously drawn support area till there. Here it makes much sense because here you see a proper sized, you see the size of the bearish engulfing pattern there. You see the size of the candles there. It's very good. So if you understand the price movement, prices have come down. Prices have tried to come down from through this breakout, but it failed to form a confirmation candle, and again retraced back towards this upper point, and from there prices started dropping down. Okay, but before prices started dropping down, you can see that there is a bearish engulfing pattern there. So this was your bearish engulfing pattern. This candle finishes your bearish engulfing pattern, the red candle there, and it has come at a very important level, which is at this support area. Okay, and also you have one more reason here, that is to draw any line you need two points, and in this case to draw any trend line also you need 2 points. You have seen initially your trend line would have been that connecting those 2 points, but after that, when if you correct it and if you update your trend line, there was a chance for you to draw a trend line there connecting these two wicks. That is your first high, and this is your second high. So in order to draw a trend line, you need two highs or two lows to connect them, and you see this line. Okay, is you can see is saying that the market is forming a continuous lower swing highs. So you have a couple of multiple indications there. One is your bearish engulfing pattern, and the second one is it is coming at right at your resistance area, and the third thing is it is market is seeing continuous swing. See, this is one swing high, next swing high was lower, next swing high was even lower, and this swing high is even lower. At this point you can decide keeping you can decide that the market may go down, but the challenging part is your targets. So this can be your first target because that was your yesterday's reaction, and from there, from that point, you would have trial your stop loss by taking an entry. Excuse me. All right. Okay. Okay. Sorry for the confusion. Okay, so you would have taken entry here. You would have taken entry here, and your stop loss would have been right above this resistance zone. I mean, the support zone. That will be your upper limit of your support zone, and your first target would be obviously this. So whenever your price hits your first target, we always say that to trial your stop loss, to get your stop loss to cost, and you can keep trialing from there. So in this case today, market has gone very far towards the downside. Okay, I'm not even taking the lowest point. Okay, the lowest point was that. Okay, the lowest point was that, till close. But let's assume that until the next swing high was your only till here. I'm not even considering that level. Okay, only till there because you have a swing high there, a reaction there. It has formed a swing high there, and your second swing high was there again. So you would have kept your target somewhere between these two swings, because this is a reaction, a lower reaction, and this was your higher reaction. And after this higher reaction, market again came down to this place and again went back to touch this level again. So on a safer note, let's assume that your target was only till this level, somewhere in between this, just after that. Even in that case, you have made a good 248 points. That is close to 250 points. 250 points of movement in the bank nifty is very huge. See the kind of movement that you got after this bearish engulfing pattern. All right. So that is why candlestick patterns are very important. Okay, so for a detailed conditions, for a detailed study on, for a detailed understanding on the engulfing patterns, you can go to our main YouTube channel and check for the video. There we have given a very thorough explanation, and also we have given an important factors that can strengthen the importance of these engulfing patterns, which are least discussed outside on the internet. So that's it for today. Please do subscribe for more such case studies on the post market or the post market analysis of Bank Nifty. Thank you. Thanks for watching.